Hello, my name is Rukayat Abayomi, and I'll be taking you through the key highlights in the financial market for the month of March 2025, brought to you by ARM Investment Managers. We'll be starting with the domestic macroeconomic update, taking you through what happened in the Nigerian equities market and the Nigerian fixed income market for the month of March 2025. The National Bureau of Statistics (NBS) released Nigeria's inflation figures for February 2025. The annual headline inflation decreased to 23.18% year-on-year, down from 24.48% in January 2025. The decline is attributable to the moderation in fuel prices, relative stability of the naira, as well as the rebasing of the consumer price index. Inflation fell to 2.04% on a month-on-month basis in February 2025, compared to 10.68% in January 2025. Food inflation also showed improvement, decreasing to 23.5% year-on-year in February, down from 26.8% in January. On a month-on-month basis, food inflation dropped to 1.67% compared to 10.33% in January. Core inflation climbed higher to 23.01% in February 2025, up from 22.59% year-on-year in January 2024. However, it declined by 835 basis points to 2.52% month-on-month versus 10.87% month-on-month in January 2025. In March 2025, the Federation Account Allocation Committee disbursed a total of 1.678 trillion naira among the federal government, state governments, and local councils. This amount was slightly lower than the 1.703 trillion naira shared in January. The shared revenue included 827.63 billion naira from statutory revenue, 609.43 billion naira from VAT, 35.171 billion naira from the electronic money transfer levy, 28.218 billion naira from solid minerals revenue, and 178 billion naira augmentation. Now, I'll be taking you through the equities markets. In March 2025, the Nigerian stock market recorded its first monthly decline of the year, shedding 2% on a month-on-month basis versus 3.18% month-on-month gain in February. Consequently, the year-to-date return settled to 2.66%, down from 4.73% in February. Although the release of full year 2024 earnings results and final dividend declarations provided some support, market gains were offset by increased profit-taking and a shift in investor focus toward the attractive yields in the fixed income space. Losses in key stocks such as Transcorp, which declined by 21.05% month-on-month, MTN down 7.27%, and BUA Cement, which fell by 10%, significantly dragged the NDX All-Share Index. Meanwhile, buying interest in GTCO, which gained 12.42% month-on-month, Transcorp Hotels up 7.84%, and Nestle, which rose by 4.62%, helped cushion the index. Their positive performances added 19.1%, 8.61%, and 3.05% respectively to the NDX All-Share Index. The top performers during the month were M-Benefits, which surged by 72.13% month-on-month, Tantalizer up 52.63%, and BDS, which gained 31.39%. Conversely, the worst performing stocks were Restarex, which declined by 26.97%, Afriprod down 24.91%, and UCAP, which lost 23.66%. Now, analyzing sectorial performance for the month, losses in Ohando led the oil and gas sector to decline by 4.02% month-on-month. Similarly, the industrial goods sector dropped by 3.59%, dragged down by BUA Cement. The insurance sector was down 2.48% due to a decline in WAPIC. The consumer goods sector also saw a downturn of 1.3%, driven by losses in Dank Sugar. Finally, sell-offs in Access Corp pushed the banking sector into negative territory, closing the month down by 0.49%. So, what do we expect in April 2025? The equities market is likely to see mixed performance as market uncertainty prompts some investors to seek safer assets. We still expect investors to pivot towards the fixed income market, lock in on high-yield instruments, pending the potential interest rate cut in the next MPC meeting. However, the release of Q1 2025 earnings could help fuel investors buying interest in the Nigerian stock market. March 2025 was a strong month for Nigeria's fixed income market, with investors adopting a cautious yet optimistic approach in anticipation of a potential rate cut by the Monetary Policy Committee. This created volatility in prices and yields, particularly in the Nigerian Treasury bills market, which led the bullish momentum. The average NT bill yield saw a significant drop of 45 basis points month-on-month, falling to 19.44%, reflecting strong investor demand. However, the FGM bond market experienced some selling pressure, with yields rising 12 basis points month-on-month to 18.65%. Despite this, the overall Naira fixed income market ended positively, with the average yield declining by 17 basis points month-on-month to 19.04%. In March 2025, investor appetite surged across fixed income auctions as markets positioned ahead of a potential rate cut. The CBN offered 2.7 trillion naira at 4 NT bill auctions and sold 2.82 trillion naira, with the average stop rate easing to 18.19% from 18.38% in February 2025. At the FGM bond auction, the Debt Management Office (DMO) offered 300 billion naira in two bond series, 200 billion naira in the April 2029 bond and 100 billion naira in the February 2031 bond, and raised 271.1 billion naira at a slightly lower average stop rate of 19.5%, compared to 19.27% at the February auction. Meanwhile, the open market operation auction (OMO) auction saw strong investor interest, with 600 billion naira offered and 1.67 trillion naira sold. The 355-day and 362-day bills were the most sought after, with 725 billion naira and 951 billion naira sold respectively. Investors were locking in high yields, anticipating a more relaxed stance from the Monetary Policy Committee in light of cooling inflation, positioning themselves for potential future rate cuts. With the Monetary Policy Committee signaling a potential rate cut in its next meeting, alongside the maturity of 349.93 billion naira in FGM bonds and 1.24 trillion naira in NT bills, the fixed income market is set for a strong performance in April 2025. Investors looking to reinvest maturing funds amid shifting rates could drive increased demand, sustaining positive sentiment. And that's a wrap. If you stay to the very end, we appreciate you. We remain committed to guiding you on your financial journey. So please do not hesitate to reach out to us on any of our social media platforms, or you can directly contact your relationship manager and our customer care representatives if you require assistance or more information. Remember, at ARM Investments, we are not just thinking about today, we are invested in your tomorrow.